And a happy Ag Day to you. I hope you're doing well out there. I'm Marlon Bowling with you. I'm joined right now by Brian Hoops, president of Midwest Market Solutions. He's based in Springfield, Missouri. And Brian, I want to get right to these markets here. Now, just to remind everybody, we did not have any overnight export sales to report this morning. Everything quiet again on that front. So nothing to impact the market, at least from the export side of the ledger. However, let's take a look at what the markets are doing. And on the corn market right now, we have the May contract 6 1/4 cents higher at 5.55 1/4, within a penny of our high of the day. In December, now 2 1/4 cents higher, and we're trading at 4.70 1/4. That's a penny from its high of the day. Just wanted to take a quick peek at the intraday chart here. That's kind of interesting. You take a look at how the market opened up, and it was just dead in the water there and just immediately bounced, and it went sharply higher just a few minutes into our daytime trading session. You can see on the left hand 2/3 of the screen, that was our overnight trade, and it just didn't do much. In fact, it eroded and kind of exploded higher once we got the daytime session open. Now let's see if that is what happened in the soybeans. Right now in soybeans, May 15 3/4 higher at 14.33 1/4. Meanwhile, new crop November up 12 1/2 cents at 12.28 3/4. And the May intraday chart here that you take a look at, that shows a similar move with a big spike right after the open today after a very sleepy overnight trade. Well, is the wheat market trying to keep up? Well, in Chicago wheat, the May contract it's 15 1/2 higher at 6.42 3/4. New crop July now up 13 cents on the day. So a big move higher in Chicago wheat, at least, trying to keep up with what's going on in corn and soybeans. Look at that move here after the market opened today. Let's look at Kansas City wheat on the hard red variety. Well, we have the May now 8 1/4 higher at 5.86 1/2. If you recall, we opened up lower. July is up 8 cents. And in the spring wheat market right now, the May contract is 9 1/2 higher at 6.35 1/2. July 9 1/4 higher. Let's go to Brian Hoops. Brian, what happened here after the open today to lift everything the way it's doing right now?
Hey, it's good to see, Marlon. We'd like to see these higher markets, and we are certainly seeing them after some weakness in the overnight in the wheat. You know, the wheat's coming off of its lows, 20 cents off of its lows in Kansas City and Chicago. Really adding to some of this market strength here, and that comes despite the fact that crop condition ratings in the plains states of Kansas improved 7%, Oklahoma improved 5%, even Texas improved a couple percentage points. So that would really have been factored into the marketplace, and now we're starting to see this market trying to follow more of the inspections numbers that were released yesterday in corn and soybeans. The numbers that we saw for soybeans were actually marking near low yesterday, but compared to where we need to be to reach the USDA forecast, we're well outpacing that pace. We were 18 million bushels yesterday. We only need to be doing 2.5 million. So that suggests that the USDA at some point is going to have to raise their export forecast for soybeans. Same holds true for corn. We only need to be doing about 51 million bushels each week. We did 78 million over the last 4 weeks on average. So again, we're way ahead of the pace. And trade, I think, just acknowledges that this quarterly stocks numbers coming out could be friendly for these grain markets. Acres are likely to be up, but with the quarterly stocks being bullish and the USDA at some point tightening ending stocks, I think the mentality is we want to be friendly, but we're getting close to some overhead resistance with the rallies that we're seeing today.
And that report will be out 1 week from today. One other thing on the dollar value for the dollar index, some analysts said that was why we had some early weakness in the wheat. June is up 434 points now at 92.170 on the June futures. We'll be back talking more with Brian about livestock next. Well, we're talking with Brian Hoops of Midwest Market Solutions. Let's look at live cattle right now with the rally taking place in the grains here, Brian. On the live cattle board with our quotes provided by Bar Chart, well, we have mainly higher trade. April is down a nickel, but the June is 90 cents higher now at 119.82. And the deferreds are all higher, about 30 to 60 cents. On the feeder cattle market right now, you have the April down 20 cents at 139.22. But May is up a dime, and the deferreds slightly lower. On the lean hog market right now, you currently have the April 52 cents higher at 95.57. All the months are higher, about 30 to 50 cents or so. So what is it that you see driving this livestock trade here so far today?
Well, the show list numbers are down this week, Marlon, about 2,000 head from last week. So that could support the cash markets this week. Plus, we're seeing cutout values turn higher. But it's that cattle on feed report that we've moved past on Friday. That report showed us that placements are down from a year ago, just like they had been for almost every month except last month. So we had dropped a couple days going into the report, anticipating maybe that report would be a little bearish. It wasn't, and now we're starting to put some premium back into those deferred and summer contracts. And I think as you get into the third, fourth quarters, you're looking at a very high likelihood you're going back into the contract high territories.
Well, all right. Now, I did not see any cash cattle trade. We've been stuck at 114. I think earlier this week, I did see a few head that brought 114.50 maybe. So is that enough to break that mold? I think last Friday we had a few at 115, did we not?
We did, and just a very few handful of head around 115, some at 114.50 area. Just not that much is moving at that higher money. We've traded 6 weeks in a row, I believe, at 114 for the most part in the Southern Plains, with just a handful traded on the cattle exchange at higher money. We really need to break out of that at some point. The April's anticipating we're going to. It's already up, 118, 119 range in the futures. It's anticipating cash is going to come up, and it certainly will. But we've got to get through some of these bigger supply numbers. And this week's show lists indicate that we're getting through the biggest supplies, and those numbers are going to begin to tighten into the summer.
All right. Thank you, Brian. I appreciate the time today. Brian Hoops of Midwest Market Solutions in Springfield, Missouri, with a look at our markets during the midday. Janet, back to you.